Welcome to part 1 of a series video chronicle presented to you by megatrade101.com. Here we have 6 4-hourly charts of the euro, the Swiss francs, the cross rate euro pound, the euro yen, the dollar yen, and the British pound. As you could see here, let's start off with the euro. The euro is basically working at 1.4198 as of this moment and is much weaker than the pound in itself, for the simple reason that most of the traders have noticed that the euro has more weakness in such a way that is influenced by the strength of the recovery of the US dollar as of this time. The reason why we have this 6 charts, so we would be able to show you the comparative relationship of each one from the euro to the cross rates, where it influences the movement of the major pairs itself. Here we have the euro dollar on a 4-hourly chart again, and it seems that the weakness is still heading lower. Now when we convert this hourly chart into a daily, you could see that it has moved from the lower price of 141 level. It is quite difficult to say whether it's going to stop or not. However, it is still obvious that the euro will make its low price while the dollar makes its recovery. It is quite important to have a comparison between the hourly 4-hour chart to a daily as well as the weekly. So you would see that the significant target level of the euro would be at its 38% Fibonacci retracement from the high of 151.43 and a low of 141.65. Now let's change this weekly chart into a monthly, where it is more defined with a Fibonacci retracement that it is within the 38.2% retracement, where a possible support would be within the range of its 50% retracement, which would be a good initial target for the euro. And that should be around the 1.428 level, but we would rather say that it's the initial target within a downtrend. Never go against the trend, especially if it's on the downside. Now comparing the euro with the cross rate, euro pound, shown here on a 4-hourly chart as well, the 88.50 level here was broken, which was actually the low price of last week. So breaking this price would mean moving forward that it would be a bearish trend for the euro as against the pound. So here we took the initiative of selling at this price level of 87.75, and it's working at 87.24, which is giving us a good profit for the time being. And when we take this to a trading where we can order and buy at the current price level, okay, giving you this profit on a short period of time, which is good enough. So having a comparison chart between the euro itself and the euro pound would give you a choice whether which pair would you be willing to risk trading. As long as you know that there is a trend which would be following the euro's downside, you could take that position. But you need to be extra careful of the risks. Here you could also see the euro yen, comparing it with the yen, dollar yen on the majors, which is moving lower back to its 50% of this range, which is currently working at 90.88. We did buy at this price level of 90.55, which is around the initial low of last week, which is 90.6055. We can take the profit here, which on top would leave a good profit for both positions. All we need to do is simply do a trade and sell the yen as it moves forward. So now you've got a small profit from 90.55 to 90.87, which is basically a 30 pip movement. So in essence, having at least 6 of the major pairs to compare the trend and prices, you would have a pretty good idea where the market would be going. Right now you could see that the continuation of the dollar influencing the dollar Swiss to move higher and working at 1.04 level, which is quite a good substantial range from 1.023 to 1.04, excuse me, making it a substantial profit if you have bought at that price level. As long as you have comparison charts from an hourly to a daily to a weekly, then you would have a better strategic planning of how you can make your trades more profitable and well worth taking the risk. Just make certain that the fundamental reports are basically considered, since the technicals are not always influential when major economic reports comes out into the picture. Doing a hedging strategy between a major pair and the cross rate would be in your favor, especially on a short-term to medium-term trades, which you can actually do between 2 to 3 days and make some money along the way. Again, just a word of caution. Watch for the fundamental reports that may affect these prices and should not be viewed as a recommendation to buy or sell foreign currencies. Please use proper trading discretions. Thank you and have a good day.